Well, it's a very good morning from me here, Mortgage Live Stream. Welcome to our regular weekly Mortgage Live Stream. Here you'll find me in a different location. We're on location. We're out in Cornwall, actually. We've got a place here for a couple of weeks, which is lovely. Whilst the studio's been got some builders in there doing some stuff, and they make loads of dust and noise. And actually, they don't want me there. So we've come down here for a couple of weeks and we're working. So I just thought I'd give you a 10, 15-minute live stream this morning. And as you can see, here's my view. So it's rather prettier than my basement and studio wall sometimes. But there we go. Let's get on to some topics for you to give you some insights on mortgages, because quite a bit's happening now. We're into February this week. The market's looking fairly decent. The housing market's beginning to bubble nicely. We've got some rumours from our Chancellor of Exchequer to do some exciting things in March. Although if you listen to brokers on LinkedIn, 100% mortgages or 99% mortgages don't seem to be too popular. But hey, I think they'll make a big difference if they underwrite them correctly, which we always do. But yeah, so things are looking fairly rosy on the mortgage side of things. And, election at the end of the year, things always pick up for next year onwards. So I want to talk to you about protection today, particularly income protection. But before we go there, a lot's been talked and said about vulnerable clients recently. And I've been watching a program on the telly. It's a series actually with Neil Morrissey. It's called Finders Keepers. You might have watched it. It's ever so good. It's about this metal detectorist, Neil Morrissey, and his son-in-law, or future son-in-law. Anyway, cut a long story short, he has succumbed to desperation and the fact that he needs money. He's got a business problem. His partner's run off with money and his business. His son-in-law needs some cash. Anyway, they find some treasure because he's a detectorist. You see, they find some treasure, and no spoiler alert going on here. He finds some treasure worth on the open market, hundreds of thousands of pounds, Saxon jewellery. Because the law says you've got to declare it, give it to museums, and you may get a reward called treasure trove. Because he's tempted to keep it and sell it privately. But see, the point is that Neil and his son are desperate for cash. Now, in a sense, they're vulnerable and they're looking for any way of getting some cash to pay off their debts and their problems. And when you meet somebody who wants to debt consolidate, for example, which is getting rid of short-term debt like credit cards, short-term loans, that sort of thing, and consolidating it into a mortgage, that person's vulnerable. And you may not appreciate what's going on in their head. They will look for the first kind of easy option that doesn't require too much of a credit, all that kind of stuff. They'll look at an easy option to solve their problem. They're vulnerable. And that's what vulnerability is about. It's not about people that don't understand you and can't understand you, etc. It's that particular, that's another example of vulnerability. So it'll be interesting to see what happens on the series. It's a bit old school. You have to wait for the next episode the next week. You kind of like have to sort of forget about it for a whole week, like we used to do years ago. But there we go. Good program all around. Now, let's get on to my main topic of today, which is selling protection or income protection, particularly. Now, as a mortgage advisor, protection advisor, you will be MOTing a lot of your customers this year, hopefully getting involved in their product transfer or remortgage. Whatever you're doing, it doesn't matter. The fact is, you're talking to them either on video or face to face to help them with the next stage of their mortgage because their 2-year, 5-year fix has come to an end. As a result of that, you'll be looking possibly to maybe to remortgage a better option somewhere else. You will talk about protection. A lot of advisors get well, they don't know really when to introduce protection and advise it accordingly. Particularly income protection. Life assurance is not a difficult thing to, critical illness if they've got a mortgage. It kind of goes together, doesn't it? But income protection, where people receive an income if they're ill, right up until retirement, is a different ball game altogether. I've got several ideas, just some ideas I'm going to throw at you, see if any of these land with you along the way. And by the way, can you see the view out the window? There's the sea out there. It's crashing over the harbour wall at the moment. The weather down here is atrocious, but then again, it is January. Now, the first thing about income protection is when would you introduce it? Now, as an advisor myself for many years, I would always introduce it as early as I could. The reason for that is that it doesn't require a mortgage to be talked about, completed for income protection to be a need. Income protection, of course, is for people on a single basis who are worried that if they were ill or they had an accident or something like that, then they wouldn't be able to do their job or their self-employment, whatever it is. So that's exactly what income protection is. So you should really introduce it, I think, at salary discussion time. So person's coming in for an MOT and you're talking about their salary, their income, because you'll probably want to update your fact find. So let's see if we can give you a ballpark figure on what you can borrow now in case you want to consolidate some of your other loans or maybe raise a bit more money. Let's have a quick ballpark figure as to what you could potentially borrow. And that's the conversation you'd have. You'd do a DIP, wouldn't you? A decision in principle, maybe a low key one without a footprint. But you talk about salary. And you talk about the fact that you're going to give people a ballpark figure, and then obviously nearer the time, you'll look at the right lender with the right particular deal that you've got planned for them. So you might ask the question, and the lady, for example, she might be a librarian. She might work for the local authority as a librarian. So you talk about that and the salary, and you have a chat about the income that she's got. Now, then you turn the conversation around a little bit, and then you can sort of say, "Well, that sounds an interesting job. That sounds difficult. What's that all about then?" If you've got a bit of a smile on, and get chatting about the income that she's earning from that job. You see, now she's thinking about her income, her salary, and of course, you make the point that that's a great income. That you're earning 45,000. That's brilliant. That means you'll be able to obtain quite a good sized mortgage that you're looking for easily. That cover the mortgage you already got. So well done. It's a good salary, that one. Now, just out of interest, here comes the big question. If you didn't have that salary, of course, you'd struggle to get this mortgage. In fact, if you didn't have that salary, we probably wouldn't be talking about mortgages right now. So, out of interest, then, how do you maintain your salary if anything happens to you? How sustainable is that salary for you? And then you pause at that point and just see what they think, see what they say. And they'll probably say, "Well, what do you mean?" You say, "Well, just out of interest, how sustainable is it if, say, for example, you were ill for a long, long time or you had some kind of accident and you couldn't work?" And then they might come back to, "Well, we're actually paid sick for 6 months or 3 months or something." Okay, that's brilliant. That so beyond that point, then how would you maintain your income then if you're ill for longer than that period? Because you need that income, of course, to pay the mortgage and all your bills. Of course you do. And just go quiet at that point. You then start coaching the income protection gap and get them thinking about it. And then obviously looking at the issues if they don't have it, etc. Maybe look at some ballpark figures. And there's no reason why not. You can't then advise upon income protection at that point. Get it all filled in and get it going. If they're looking for property to buy, you can do that later, can't you? But the income protection can be set up there and then. And I know a lot of mortgage and protection brokers that do that, particularly some of the guys I'm working with, my coaching side of things. A lot of them have 2, 3 meetings when someone's looking for property, and they'll talk about income protection right on meeting number one. It's vitally important, and for somebody of a young age, good employment, good illness, it's not too expensive either. So that's when you would do it. So you link it to the salary discussion. I think is the answer there for you. Now, if they ask you, you say to them, how sustainable, how sustainable is your income? They might say, well, it doesn't worry me really. It's then that you start talking about the benefits they get from the company. You could also mention state benefits at this point because we have incapacity benefit. That's one to mention that the government will chip in with £100 or so a week to cover your costs. A little bit of universal credit. You might therefore find that your welfare benefits might cover you and help you out, but it won't cover your mortgage or anything like that. So talk about that as well. I think that's a good one to talk about as well. When it comes to illness and accidents, people kind of understand that, but don't forget mental illness as well. Now, I've been reading stats showing that a big proportion of people claiming incapacity benefits now are claiming on mental health illness, which is keeping people off work, particularly since the pandemic, for months now as well. So younger people tend to resonate more with that than illness or accident. So bring up the topic of mental illness because obviously income protection covers you for any reason why you can't work illness wise. It doesn't have a list of preconditioned illnesses, is it? It covers you for anything that stops you from working due to ill health, accident, sickness, that sort of thing. And mental health is just important. So don't forget that one. When you talk about their occupation, and the lady I role played there was a librarian, you could compliment them saying that that's a great occupation. When you talk about income protection, say that actually you'd be classed one under income protection. That means low risk. In other words, you would find your premium is very competitive because of your occupation. And that just make them feel good about that as well. And also with income protections, you have whether you want any occupation or all occupations. In other words, if you were ill, could you not do your current occupation, or could you not do any occupation? There's a big difference between the two, of course. There. Now, a librarian could possibly work with some kind of accident, illness, wheelchair. You could still do the job, so which brings the premium down. So always compliment on that as well. Always ask if they know anybody who's been off ill. People generally know somebody who's off on the sick for years and years, maybe. Do they know anybody that's been struggling with mental health since the pandemic has not worked as well? So that's another one to talk about. Again, bring out the topic along the way. So I think is important. Other tips and ideas to help you. I've heard one mortgage protection advisor. She was ever so good. She talked about in the basement, in the client's basement, they had a machine. Say, for example, you had a machine in your basement, and this machine, you plugged it in, and it printed money every week. You just chugged away and printed money. Just say, and this money you use to pay your bills and pay your mortgage and stuff like that. And she asked the rhetorical question: what would happen if that machine broke down? Would you get somebody out to fix it? And if you couldn't fix it, would you insure it to have it replaced? Of course, the client's laughing at this point. Of course, they would. You had a machine in the basement that printed money. You want to make sure it was insured, wouldn't you? I mean, in my studio back at base, we have a basement studio, so we have a pump system, very elaborate, which because it's underground, you see. So rather than tanking the walls, we have a pump system that pumps the water out. And of course, I insure that. I have a maintenance agreement, all sorts of things to make sure that she comes on and fixes it or maintains it. I don't want that to break down. Because if it broke down, I couldn't do my work. Same thing. Why wouldn't you insure yourself then in the event of illness if you were going to insure a machine? I don't know. It's quite funny, isn't it? A lot of people talk about pet insurance, that sort of thing. And I get that. Car insurance, you insure other things. Why don't you insure yourself? So you can certainly mention these things, but be careful because you're probably overcoming objections at that point. The best way to handle it is through coaching, asking people how they would handle it if. What would happen if this happened to you? How would you pay your bills? What would you do? How would you pay your mortgage if you lost your house, etc.? Where would you live? You could certainly go down that road as well. I mean, I've carried income protection since I was 25. I've had it for 5 years. I didn't have it when my corporate employer gave it to me for free. But I've paid premiums, and now it's paying until I'm 70. It's quite expensive premiums in the hundreds now. Happy to pay it because it's important to me, isn't it? National insurance, of course, has gone down by 2% for majority of people. So a lot of people are finding another 30, £40 in their monthly pay packet. They think, where's this coming from? Because most people don't understand it. So if they're a bit worried about the cost and you're talking about budget, use that to cover the income protection. Why not? Bring it out. It's certainly a topic to think seriously about. So there's a few ideas there for you to help you along the way. There's a few ideas that might give you some ideas about selling a little bit more income protection. There we are. Let's keep it at that, shall we? And sign off now because we've got some things to do here. We're working down here. It's lovely actually getting all your tech. It's this beautiful apartment that we've been able to get hold of. It's not expensive here in January in Cornwall. So we're really looking forward to spending some time out here, a bit of fresh air and all those good things. We'll be here again next week. As always, if you want to get on our mailing list, there's a little link in the show notes just below. So you can link on that and we'll keep you posted what's going on as well. So if I can help in any way, let me know, won't you? Other than that, we'll see you next week. Put a bit of music here for you to enjoy. Enjoy your week. Enjoy the business that is going to pile your way. And we'll see you again next week.